Afternoon. How are we all doing? Afternoon, Peter. Afternoon, Paul. Afternoon, Peter. Afternoon, Paul. Sounds like a nursery rhyme. How are we doing? All good. Wednesday afternoon. Not a lot happening at the moment. So, yeah, we'll have a look at what's going on. But, yeah, a bit of a quiet day, unless you are looking at the yen today, which has been pretty busy. So, market is open. So just quick recap of this morning, if you weren't here, which you won't have been if you're members, not members rather. Had a bit of a whippy session this morning, but nice and profitable for ORB. I can't actually operate a computer today for some reason. Where's my pen gone? Every day, different place. Afternoon, Marco. So yeah, this morning we did a lot of testing this morning in the members stream on the opening range breakout pre-market. We found a really good set file as well for pre-market, post-market, 15-minute range breaks. But anyway, I've posted that in the members group if you want it. So in Telegram, Discord even. Long break didn't work out on the FTSE. We came straight back down, flipped short, and then it started to whipsaw back up again. So I took it off basically with a small profit, which paid for half the FTSE loss. Glad I did, because it came straight back up, hit the highs, and it's coming back down again. So it didn't go anywhere. Beautiful break on the DAX, though. DAX just went straight short. I took a partial there. As soon as I took the partial, it flooded down. So I took the second half off down here. So overall profitable morning, not great. I could have had more out of it, but got what I got. Yesterday, lovely day as well. $1,000 yesterday. I've rejigged my dashboard. I've just set it up so that I can show just what's going on at the moment, basically. So this is the daily history, recent dailies, so you can see what I'm making each day with the ORB strategy. And these are the last closed trades, which will help explain how the loss recovery system works a little bit better. And obviously down the bottom here, the open trades will appear. So I thought I'd add that in so you can see what's going on. So just looking at the US indices at the open, we've got 1.5 minutes left. Then we'll look at the news and the FX and see what trades we can get on this afternoon. Very big rejection to the upside on the Dow Jones. Huge push up. Really rejected the highs there. What's that tapped into? So that was the sell-off, end of day sell-off yesterday. At the end of the session, we've tapped straight into that and sold it. Market's been rejecting this area in the Globex session all morning. And obviously that was the last push down, which completed that big sell-off yesterday. They've tried again to go long, but it's rejecting. So we'll see if they can get through that. If they get through this area, I guess we'll probably come up and retest highs. So see where they go this morning. We'll give that a couple of minutes. Morning, Chris. Afternoon, even. Don't know what time of the day it is. Okay, 10 seconds to go until the 5-minute ranges are in. Morning elevated. Afternoon, even. I'm on a completely different time zone today, aren't I? Let me put my glasses on and see if that makes my brain work a little bit better. No trade on the S&P. No trade on the Dow. Ranges are too small. NASDAQ also only just too small, but that's closed right at the highs, so wouldn't have taken a trade there anyway. We need a pullback, some kind of pullback from the highs before an entry goes in. So didn't trigger. So no triggers on the 5-minute ranges. So we'll come back to that in a minute and have a look at what's going on there. Just look at what's going on with my Swiss yen. So big, strong moves on all the yens today. We'll look at the ADRs in a minute, but huge strength coming into the yen today. So looking at news, over the morning, we've had nothing come out. We had the Australian wage price index this morning, obviously didn't do a lot. So far this morning, going through the news, I've been keeping an eye on it. There's not really been anything impactful. Trump, there's a lot of stuff been said this morning. So this is going back to this morning. There's nothing much overnight either. But there's a lot of like mumblings this morning, but nothing particularly impactful has been said about anything. Tax cuts bill is advanced by the White House panel on party line vote. I don't know what that means. There may be some news on Russia-Ukraine today. So obviously there's a deal being done potentially there. So basically, obviously, the US and the Ukraine are jumping into bed so the US can get all the resources, and then Russia obviously will fall out with the US and we'll start World War III. Or they'll come to some kind of agreement over a ceasefire. One of those two things is going to happen, isn't it? So let's hope it's the latter. Yeah, again, nothing much exciting happening this morning. So that's your news. There isn't any. We've got the CPI numbers came out yesterday for the US. They were big negatives. I went through this morning in the members stream. There's not really a lot of impact on CPI right now because the inflation numbers are distorted before the trade tariffs kicked in. So this data is before the world got upset with the trade tariffs. So what's happened with inflation over the last 30 days prior, really irrelevant. So the market yesterday, if you have a look at Euro US dollar, for example, we had a slight push to the upside, which means obviously negative US. And this morning we've had a continuation move, but not really that strong. So market unhappy with those US numbers, which is correct, basically meaning that inflation's coming down, which gives us the opportunity to drop interest rates, which gives us the opportunity to weaken the US dollar. So obviously that is what the market is doing. But whether or not that's going to be sustained, I'd be surprised. We've had a lot of weak US dollar over the last 6 weeks. So I reckon we're going to pull back a little bit on it. We'll have to wait and see what the next data set comes out at. But at the moment, there's obviously a pullback continuation potentially at play here. So you got high, low, we accumulated for a bit, dropped down. So we've come into this resistance, previous support. Yeah, turned into resistance after it broke that propulsion gap. And now we're retesting the previous support. So this is exactly where I would expect the next down leg to become, i.e. next strength in the dollar. The yen has strengthened, as you can see. So every single yen pair has hit ADR today. Yep. So the only thing that's been moving today is the yen. We've got big, strong moves going in across the board. I shorted the Swiss yen last Monday, Tuesday, Wednesday, Friday, Thursday, nearly a week ago. And it's obviously just flip-flopped and sat around since. So that's coming down nicely. I was expecting basically a bounce off the highs here. Yeah, so that's where that short is. Shorted it, longed it off the lows, got back up to the highs, shorting it again. I'll get out down here and relong it. Until this thing decides where it's going, just going to stay in a range. So short on that at the moment. Target is down here at 125 ADR. So I'm getting out before we get back to the origin of the move in case it is a deep pullback continuation to the upside. And all the yens basically are the same today. So you've got mean reversion opportunities across the board on these. Drop down low time frames, look for reversal alerts, potentially for long opportunities. But yeah, all extended to the downside. I'm not quite sure exactly why this yen is quite so strong. I'm suspecting the market is just putting a little bit of money into safe haven with what happened with the CPI numbers yesterday. So they're selling the dollar and buying the yen. And obviously, if something kicks off with the Ukraine and Russia situation today, you're going to want your money in safe havens. So we'll see. We'll see what happens with that. But yeah, nice mean reversion opportunities on these yens, all of them. If we get beyond 125 ADR, there's the gap fill going in on the CAD yen, look, that I said about. So when we get down to that gap fill, that's a good opportunity to buy. So if you get 125 to 150 ADR today, you've got confidence with the gap fill. They'll probably pull back into this propulsion gap and retest that low. So there's a lot of opportunities coming up on all these yens today. They're the only thing really that's moving. Everything else is pretty stagnant and sideways. Gap fill on the pound yen, still incomplete. So you're looking at 150 ADR for a bounce off of that weekly high, previous weekly high. This area is where the gap is. Brilliant confluence. Market structure is long. So that looks like a good long opportunity down there. And US dollar yen and New Zealand yen pretty much the same. So US dollar yen just come and tested the gap fill. New Zealand dollar yen not there yet. So New Zealand dollar yen's got a lot further to go coming into these highs. Potential bounce out of this propulsion gap at 175 ADR. So all the yen pairs have got slightly different distances they've got to do the gap fills. Swiss yen's the only one that hasn't got one, which is the one that I'm in. So hopefully that'll just hit target today. So I covered this morning, obviously, there wasn't any ADRs. We had some weekly range extensions, which are all opportunities to get into mean reversions. So Aussie dollar CAD being the big one at the moment, that's just tapped 150 this morning. So that's 150% of the average daily range went in yesterday in one day, basically. So a mean reversion on that, on the cards, it's really holding up well, though. The commodity market's holding up. Australia, New Zealand, very strong. But there's a few opportunities for mean reversions there. RSI dashboard, totally flat. Everything is kind of either undoing or is sideways at the moment, apart from those yens. But we will be getting some yen extensions probably in the next 20 minutes, I guess. Yeah. So we're going to start triggering some RSI extensions in the next 20 minutes when these hourly candles close. So we'll see some alerts starting to come up on the dash for mean reversion. There you go. There's FX done. Nice and easy. Okay, so no trades taken yet. S&P, there's your 10-minute range. Again, too small. Not enough movement in the S&P this morning. NASDAQ range is in. So I will take a break of the 10-minute ORB. And the Dow, we've got an inside bar. So inside bar on the 10-minute, so contraction, no directional bias. So we'll wait for this 15-minute candle to go in. If this is an inside bar of the first 5, there's no trades on the Dow today. We'll look at the 30-minute range and try and take a break of that. But nothing trading so far. There you go, done. What else have I got to talk about? Anybody want to get any FX pairs they want to have a look at? Where did you say you posted the set file? I can't find it on Discord, or am I blind? It's in the members section in Discord. YouTube members. There. See that? Behind my head, but you can see it. Can't see the YouTube members on Discord, then you need to link your YouTube account to your Discord account. Why I don't see YouTube members? Because you need to link your Discord account to your YouTube account. There's a post on member stream in membership. Posts, sorry, in posts there, which tells you how to do it. So just go to posts on the channel, and that will tell you how to do the linking. Afternoon, Mark. Let's check how we're doing. Virginia, pound odd. We'll have a look at pound odd. We're just breaking out. So there's your 15-minute range in. No range formed on the Dow or the S&P. So the only trade I'm taking off the 15 today is going to be the NASDAQ, which looks like it's going to short. So we'll wait for the 30-minute ranges to go in on the other two, but NASDAQ might get a trade on. Pound odd. So at the minute, obviously, we're just sideways for the last sort of 6-7 days. That's your last weekly range, high, low. We're bang in the middle of nowhere at the minute. So accumulation, we're just sitting around sideways, not going anywhere. So we're back basically. So when I talk about balance and price discovery, this is a little bit of an odd one because it's Trump and tariffs and all that sort of stuff. But this is a balance, area of balance, which is basically an area where the market is happy to transact. There is no requirement for trading outside this zone because there's plenty of orders to complete in these areas. So they would just get the business done. We then have a price discovery phase where we see if we can trade at higher levels. This was caused by Trump and undone. We go back into balance. As soon as somebody tries to trade in a new area, we will usually get back to the previous area of balance and stay there for a bit. And then it will either break one of those two. Because it's been high, we know that there's balance down here. It will probably go short. So, but right now you're bang in the middle of nowhere. So short RSI extensions to the upside, ADR hits to the upside, wait for reversal alerts on lower time frames. Shorts. Not really going anywhere at the minute. If you're position trading it, you should be out of any positions you've ever been in already. There's no reason to be in any positions on this. If you were shorting that, you would have been scaling in and then you'd be out already. So, yeah. But it's not really going anywhere at the minute. As you can see, the entire last week was sideways. The 3 weeks before that was sideways. Trump ruined the world. And since then, we don't want to go anywhere. That's the way it works at the minute. We all wait for Trump. Swiss yen, ADR. Thank you very much. So target for me is 125 ADR. So I'm targeting the middle propulsion move, which was the accumulation break of those highs. So I'm looking for the market to step back in here and add, if it's going to be a break long. US dollar Swiss. David, God bless you too. Thank you very much for the $10, David. Much appreciated. I like David. David, you should be in my stream every morning as well. That'd be really good. But thank you very much for the $10. Much appreciated. I got it under the different name. I know the problem. Good. Okay, that's to do with the YouTube, the Discord stuff. Right, US dollar Swiss. Again, bit of a difficult one. Obviously, tariffs. I think we looked at this one yesterday, or might have been Monday rather, or it might have been another pair that looks the same. There's a high probability, I think, that we're going to return to the origin of this move, which means gradually just buying the dollar until we've undone this on most pairs. So again, it's the same story as everything else. The market is in shock. We don't know what to do. We get a bit of news and we move. And then we sit around in shock because we don't know what to do. We wait for the next news and then we move. At the minute, obviously we had some negative news on the CPI numbers, which has obviously driven this back down after the positive news that we had the day before. So right now, this area here, this previous high, which is a 3-week level. Look, there's 3 black lines there, which means there's 3 weekly levels there. That's exactly where the market's bounced. So I would look for new highs to come in. CAD yen 125, they're really killing this yen today. Another one just gone in. Really strong buy. Someone knows something. Aussie dollar yen 125 ADR. So yeah, at the minute, this is obviously the propulsion move from that origin there. We have tried to sell it again, we broke into it and they're selling this area, but you're selling straight into this accumulation break, which is where the buyers are sitting. So right now, you are stuck between the sellers here and the buyers here. So whichever one of these breaks first and holds is likely to be the direction. And then if we go break long above the highs of this week, which is Monday's high here, if we break that high, which is potentially happening now, we'll be going back up into this monthly level here. So there's lots of upside on it, but the Swiss franc at the moment is likely to be reducing interest rates again. So obviously, if you look at the numbers for the Swiss at the moment, the current Swiss franc is sitting at 0.25. The inflation numbers came out 0 last time. I think it was 0. There you go. Yeah, 0. So the Swiss franc inflation numbers were expected to grow and they didn't. So that will force the Swissies to drop interest rates again to make sure they don't go into disinflation, which means that we're going down to 0 interest rates. What that's going to do is weaken the Swiss franc. If the Swiss franc's going to be weak, the US dollar is going to take advantage and it's going to rally. So the only thing that's going to help the Swiss at the moment is if there is a big conflict that kicks off. So if it kicks off in India and Pakistan, and for some reason we all need to get involved in it, then we'll have a safe haven run into the Swissy, and obviously that will drive this back down again. Or if we have Trump come out and say, do you know what, I don't like China anymore, I'm going to put 185% tariffs on them, they're going to sell the dollar and buy the Swiss franc, which means we'll be back down there. But other than that, there's no reason for any Swiss franc strength at the moment. So it should start to pull back. Short term, obviously, we don't know what's going on with the dollar from day to day. So this you can't really judge. But in theory, based on the Swiss franc part of the cross, that's going to be weak. So yeah, be looking for longs on that. A beautiful accumulation break. Yeah. So this is another good example of what I talk about when I talk about balance and price discovery. Balance. Market is happy to trade in this area. Price discovery. Can we trade at a lower price? No. Okay. Let's try a higher price. Balance. We're happy to trade here. Can we trade at a higher price? Yes. If not, we'll come back into here and it will try the lows. If it bounces here and makes a new high, price discovery will turn into a trend. We will then move to the next area of balance, which was here. We will get to that point and then we will either bounce back out of it or more likely accumulate in there, try a price discovery long or a price discovery short from there. That's all the market ever does. It's looking for areas where it can continuously conduct business efficiently. When somebody needs orders fulfilled at specific prices, they will try to move the market, which is why it's called price discovery, is we're discovering whether or not there is people wanting to do business. If there is, we'll stay there until the next stage. If there's a consensus in direction, we get a trend. And then you don't get price discovery and accumulation and balance. You tend to get pushes and pullbacks. This is moves, profit takes, moves, profit takes, moves, profit takes. At the minute, we're in price discovery mode, which is basically range bound. This is what 80% of the market does. So at the minute, we got a low, a high, lower, sorry, a low, a high, a higher low, a higher high. We're putting in a higher low. Market structure is long. But this is where you're going to find resistance. There you go, US dollar Swiss. Right, short NASDAQ. So we're about to hit the 30-minute range. So this candlestick, when this candlestick closes, the 30-minute ranges are going in, which is the initial TPO candle in futures. So that will be your low, that will be your high, and that will be a tradable range. So I will be taking a trade on the S&P and the DOW after the 30-minute candles are in. Yeah, perfect. So yeah, we'll be taking a 30-minute break on those. Already short NASDAQ. So target NASDAQ downside. Ooh, tricky one today. So Globex lows are the low of yesterday. So this is where we closed out yesterday after that initial sell-off at the end. Huge rally yesterday. So they've been bouncing off that in Globex all morning. So when we get back down to this area, it's either going to get rebought or they're going to break through. If they break through that area to the downside, you're coming all the way down into this propulsion gap. There's nothing to stop it. This is pure price action. So this area here, so this propulsion gap here is your potential sticking point. They may find some buyers here. They rebought that level. So there is potentially an argument for taking a partial there. But other than that, that accumulation break, there is literally nothing but clear air in that whole zone. So everything here is dead air. It will, if it gets down to there, it will probably flush that really, really fast because there's no volume, there's no liquidity, there's no imbalance, there's nothing there. It's just an area of fresh air until we get back down to this accumulation break, which is again the balance price discovery. That's where we found the second area balance. First area balance, price discovery, and that's where we found out we could trade. So we continued to trade there all morning. Now we're seeing if we can go long. We can't. Price discovery failed to the upside. Therefore, you then try to price discover to the downside. If you can't make it to the downside, you end up in a range. Balance. Same thing happens every day. It's just a case of trying to read what the market participants are trying to achieve. So we'll see where we go, but obviously broken short at the minute. We'll one short NASDAQ. We'll see where we go. So just go through my exposure on the position trading at the minute. I've got 6 on. Aussie New Zealand shorts I'm in from all the way back here. So that was the initial short looking for a continuation to the downside, and it just ground around for a week. So first entry, second entry, third entry. I took the third entry off and did a partial DD control on the first entry. We pushed back up, so I added that third entry back on, and then we had that big move up in the news on Monday, so I added the fourth. We've sat around since then, not going anywhere. So average is just over 125 to the downside. So what I'm planning to do is if we get back down to break even on this one, I'm going to close that out, do a little bit of DD control on this position here. So I will do that. Same as there. Yeah, just close one out, do a partial, keep the average nice and close. And then I'm looking for them to pull back on this leg at some point. Got a nice resistance here at the monthly, which is what I took the trade at on Monday. I did this one live on stream on Monday, which is this area here. So looking for that to hold, basically. If they can't get through there, they will pull back and try this low. Aussie dollar, US dollar. Took a first short on that yesterday. That was 175 ADR push to the upside. Lovely big propulsion gaps after the reversal alert went in. So shorted that one yesterday with a massive spread. God, look at the size of that spread. Anyway, so that's the backup second entry if required. Not needed it so far today. So I'm looking for them to pull back down basically on this leg. So that's not a bad target to the downside. That propulsion there, which is about 3/4 of an ADR. In fact, there's an argument for holding this further. I mean, the EA is going to get me out when I get 1 ADR anyway. So again, balance, price discovery failed. Yeah, price discovery looks like it's failing. There's no interest in buying above that area, so they'll probably come and retest these lows. If we break those lows, again, it's absolutely nothing until we get all the way back down to the origin of that move. It's all clear air here. So big drop potentially. We need some US dollar strength to come through. Swiss yen in that one from a few days ago. I've already covered that short. Euro Swiss, I haven't taken a trade on. Last entry was long there. I was very tempted to get into this yesterday as a short, but I decided not to. Hasn't gone anywhere since I did because it was this propulsion gap double top. I was looking for a sell out of there. I decided not to take it because I preferred other stuff. But if we do push up into this area here, which is this 3-week high and a 2-week high, which is that reversal there, I'll look to short up there and then come back down into this propulsion gap. But it might not get there. It might just sit around sideways, which I'm not really interested in. Euro pound I took. That was an entry back here. So I was looking for this range to hold. That was what I assumed was going to be a price discovery failure to the downside, which they didn't. They double bottomed it. So I got in on that and then immediately sold that propulsion straight down. So 2 entries on that one. Third one is here. Didn't quite get it triggered today. So I've been sitting around for 2 days doing nothing. Lovely reversal alert gone on this on the hourly and a retest. So there's your W pattern reversal. It's like a triple really. We've made a new high and we've made a new low. So there's your low, high, higher low. So looking for reversal to come back in. This area here is the first stumbling block, which is this propulsion move here. 150 ADR to the upside. My average is there. So I'm looking for a push up into there. Probably more likely up into there. Euro CAD also got on as a short. Second entry on that one is going in above the highs. So that's my area for second entry to bring the average up. And then I'll look to get out on a pullback into this propulsion gap. We may well, though, come all the way back up into there, test that high there. So there's potential if it breaks out of these highs that we're just going to grind up into there, in which case then obviously I'll be looking for a pullback on the big move. And pound US dollar, got into a second on that one yesterday. So that's the first entry down there. I took a breakout. Don't normally do breakouts, but I decided to take a breakout because when Trump announced the undoing of the second batch of tariffs, obviously I was expecting continuation in US dollar strength. Obviously we got bad numbers after bad numbers after bad numbers. So the market is showing its colors. We're not interested in buying the dollar. So unfortunately, I've had to scale in. Second entry. This morning, we've hit that propulsion gap and resold it. So there's a good short entry there. My next entry is going to be above there, which is up at this area here. So if it does continue after that V-shaped recovery to push higher, that's where I'll be taking third entry, bring the average up, and then we'll have that massive leg there to pull back on into propulsion at some point. We will probably find resistance up here, because this is near-term resistance. So I'm not worried about it. There's only 2 positions on, but somewhere up there below the monthly high, third position will go on. So I'm averaging into that move there. We'll see. Are you happy sticking with just the 7 pairs? Nice idea as following 28 manually, which I used to do is hard work. Use the EA. This is what I built the position trader EA for. It trades everything for you. But for exposure purposes at the moment, I don't want too much exposure on. I think now we're getting back to as close as you can get a normal Trump presidency. I think we're getting back to normality. We've had all the nasty tariffs. We've had the undoing of all the nasty tariffs, although we're not quite back there on most things yet. But we're now back to more normal trading conditions in the fact that banks and institutions are back up in the greed area, which means that normal price action should hopefully commence, which means normal market structure, which we can trade in either direction. So I'm keeping the risk uncorrelated at the moment and low until I can see the markets back to normality. It's not going to be massively profitable, but it's not going to be dangerous. So although the market may be switching up into greed, Trump's doing a signing ceremony with the Saudi Arabians. I don't think we've got the latest fear and greed yet today. No. So if you look at yesterday's, we're back up firmly up here now. I'm still down here because I can't move the market. They can do what they like, but I can't. I have to ride with them. So I'm sitting down here still at the minute. When I see this sort of stabilizing, we should see some decent movement coming back in. But right now, until he's done his first kind of 6 months, he's got all of his new stuff out the way. We know what he's doing. His tariffs have been in place. His tariffs have been removed. He's got 10% for America. Well done. Great. Until we've got that out of the way, we're going to see a lot of erratic movement. Watch the markets because there's a load of stuff being signed, gone into drawdown on the NASDAQ. So yeah, once we've got that out the way, then I'll probably start adding some more risk. But right now, all these 7 pairs that I'm trading are doing is making sure that I'm not trading correlated instruments. So these are all that none of them are correlated with each other positively. None of them are greatly correlated with each other negatively. They all move independently. So if something starts to squeeze, I'm really only going to have one squeeze on, unless the entire world squeezes, in which case I don't want any more exposure than what I've got. Yeah. So it's just keeping the risk profile low at the moment until we can get a rough gauge as to what he's going to do next. And there's all sorts of stuff going on. This war with Ukraine. If America does sign all the deals, which they have, and suddenly decides we're now going to move in and start mining, which they will, Russia is going to lose the war. Yeah. Because Russia will not be able to keep attacking Ukraine, because if they start killing American citizens, they're going to have the wrath of the US on them. So that's going to hack off Putin. He's now going to need to do something else, isn't he? So we've got so many things on a knife edge at the moment. The India, Pakistan things flaring up again. That's flared up every sort of 3 to 5 years for the last 20 odd years. But this is quite a big escalation. The Gaza stuff's not sorted out. So Trump's not the only threat to the markets at the moment. When the markets are scared, it's quite difficult to make money because they tend to do nothing but react violently to news events. That isn't conducive for any form of trading apart from breaking out. So it's a difficult market. Intraday, you can do what you like. Intraday on low time frames, stuff moves all the time. It's going up and down all the time, but you're never going to be able to pick the direction. This is why people struggle on 5-minute charts, because the direction that you pick is never going to give you more than sort of a 1-2R return. So unless you're consistently getting a 50% strike rate, you're stuffed on low time frames. Higher time frames, position trading, we don't need to worry about that, do we? We get into stuff and we wait because the market will correct itself. But it will correct itself based on world events, and we just wait for the world events to happen. And at the moment, it's the Trump, isn't it? A lot of whipsawing going in on that news with Trump signing stuff. So pull back into propulsion on the NASDAQ. So there's your buyers. There's your sellers. One of those is going to break. Dow Jones, absolute mess. There's your 30-minute range. We're bang in the middle. So no directional bias on the Dow at the minute. Again, same thing. Obvious sell zone, obvious buy zone. One of those is going to break. So we take the 30-minute range break. We're pretty much guaranteed to get the run, aren't we? As long as it doesn't sell, buy, sell, buy. Breakout trading doesn't work in a range. I have never run an automatic EA in 15 years. I have all your dashboards, etc. There are many like me who are not sufficiently computer savvy. You don't need to be computer savvy to run an EA, really. I mean, this is an EA running this. I'm not touching anything. The EA is doing all the trading for you. It's easier. The only thing you need to be savvy with is the ability to drag and drop. Yeah, so drag an EA onto the chart, set it up as you want, read the manual. That's all you need to do. Watch the video. That's it. Yeah. So it's all EAs do for me is they tell me when I should have got in if I was awake and if I was at the computer. Yeah. If I'm asleep, I still want to get in. So the downside to manual trading, downside to manual trading is that you miss opportunities. Automation also takes the emotion out of your trading. So if you're an emotional trader, which everybody is because we're all human, the emotion is removed. So indicators show you what you should be doing. EAs do it for you. So if an indicator says you should be shorting it, you get a signal and you go, oh, do I want to do that? And you'll start analyzing, over-analyzing, talking yourself into the position, talking yourself out of the position. The EA will do exactly what it's said to do. There's a signal there, I'm shorting it. And the reason it's doing that is because you've back-tested, robustness tested, and formulated a strategy which has a long-term edge. Take the trade. Don't think about it. And this is why I automate everything, because I don't want to have to sit here, analyze, and think about everything I do. That's not the job. The job is to manage risk. This is my risk management platform, the Portfolio Dash. So this shows me my exposure, shows me how things are going, shows me where our risks are, and it allows me to control closing. This is the only thing I need to watch manually. I don't need to be doing this manually, although I do. Yeah. But if you're going to trade less pairs, it still doesn't stop a perfect setup arriving for the Aussie New Zealand. Like that one. For a long. At 2 o'clock in the morning while you're asleep. You missed that. Because you weren't here. The EA doesn't miss a thing. The EA takes everything. But you know, it's not really a tech savvy thing. You just need to read a manual. It's the same as anything. You don't need to, and you know, these days you can ask AI everything. So if you're worried about setting up a VPS, ask AI, or go to freelancer.com and go, I need someone to set up a VPS with a hosting company for me. Install MetaTrader 4 so that I can log into it and tell me how to log into it. Someone will do that for $20. Get someone tech savvy to do it. I'll do it for $20. I'll do anything for money. And before you start getting any ideas, I'm not going to do anything on live stream for money. But anyway, it's just easier, I find. And you know, it's the main thing is the emotional thing. Triggered short on the S&P. So short S&P as well. Does look like we're going rangy today. But yeah, emotion is the main killer for traders because you'll just get cross. If you've tested something in the back tester or any kind of strategy tester, and you've seen it take trades and do something over and over again that makes money. When you see something like this happening today, where we're going into drawdown after trying to break short, you know in the back of your head, you've seen this happen 1,000 times, and you know what the outcome is. At some point in the next day or two, we're going to get a clean break, and we're going to get all this money back because you've seen it happen. Doing it is very different to knowing it will happen. And automation, again, with like the opening range breakout EA, I don't have to think about it. I don't have to calculate anything. I don't have to worry about risk. I don't need to do anything. It does everything for me. So I just sit here and I make manual decisions. This morning, I said in the live room, I made 2 really bad decisions this morning on these 2 trades. I made totally the wrong decision. So we broke short and I said, okay, this one has broken long. This one has broken short. We've got divergence on the indices, which typically doesn't happen to this extent. So I said, right, I'm going to shut this out with a partial. And this one I will leave running. So I shut that out with a partial, left that running. What happened? That collapsed. That collapsed. So I took half the profit I should have taken on this one, and I made a loss on this one where I should have taken the profit. Manual decision, emotion. Yeah. If I'd have let the EA just carry on doing what it was doing, we'd be up about $800 to $1,000 this morning. But we didn't because I got involved. Yeah. So there's just, I know the edge is here. I've tested it to death. I've got a system parameter permutation test with 10,000 results. 8,000 of them are profitable. I don't need to worry about the strategy working. The strategy has a long-term edge. Short-term, though, you're going to get days where it makes a loss, but you know it's going to recover them because you've tested it. So let the losses go. Let the EA take the losses. Let the EA handle the risk to regain the profit. You need to get tech savvy. It's a tech job. Yeah. Yeah. It's like saying, I'm going to be a doctor, but I don't fancy learning how to use a scalpel. Sorry, you can't be a doctor. This is an IT-driven, finance-driven, analytical-driven job. If you're not good with computers, it's difficult because it's all computers, isn't it? It's analytics. The whole job is statistical data analysis. That is what trading is at the end of the day. It's gambling based on statistical data with no indication of what's going to happen in the future. It's probably one of the hardest jobs on the planet. Looking at stuff that's happened in the past, trying to find something that worked on that time frame, and then hoping it will carry on doing what it's done for the last X number of days, years, or months that you've tested over. Yeah. And then applying a gambling strategy to it to try and extract money. That's the job. Some people might think, I'll just go down to bookies and bet on the horses. Same thing. We talked about it this morning. This is exactly the same as casino gambling. What we're doing is we're going into the casino. We have a red or a black outcome. It's binary. It will either go up or it will go down. It will come in red or it will come in black. Yeah. The difference between the casino and here is when we gamble on the casino, we have a fixed risk reward ratio. Yeah. Where we do long and short here, when the market moves in our direction, we can adjust our risk. Yeah. Which gives us an edge. So we can create an edge. You can't create an edge in a casino because the casino has the edge. So it's advanced gambling. That's all mathematics. Got to be good at maths. Got to be good at computers. But if you're not, employ someone. Sometimes I choose not to take entries that the EA would take, and it proves to be the right thing. Yeah, it's a 50-50 shot. Think about what you're saying. Sometimes I walk out without an umbrella and it rains. Sometimes I walk out without an umbrella and it doesn't rain. Sometimes you'll press the buy button, it will go up. Sometimes you'll press the buy button, it will go down. It's a binary market. It can only go up and down. Yeah. So why not let the EA automate it? But let the EA automate it with a traded, back-tested, robustness-tested strategy that has a proven edge, or you hit the thing at random, hit the button at random, take trades, never document them, and hope that it works. Yeah, that's the difference between strategy automation and successful traders and people that just press buttons. Yeah, use something that works, that is proven to work. You can backtest, you can prove to yourself that works. If you pick up an EA and test it over 3 years and it consistently makes profit, that should give you some hope that not pressing the buttons manually is the right thing to do. But just my experience, it's just, I traded manually for 15 years. No, not even that. Probably 12 or 13 years. And yeah, I got profitable, but I was constantly watching the charts. So I created the dashboards, and the dashboards meant that I didn't need to continuously watch the charts because I could open up my chart and go, I don't need to look at anything right now apart from the Swiss yen. Why? Because I'm doing an RSI mean reversion strategy and we have a signal. So that cut my analysis time down from let's flick through 28 charts to let's look at one every hour. So the dashboards are brilliant for doing that. But I now have to make a manual decision. So I'm going, okay, my back-tested strategy tells me that when RSI gets extended to the downside and we get some kind of signal on a lower time frame, reversal alert, 3-bar reversal, moving average cross, reversal alert, yeah, that I should long. So I'm going to take that long. But hang on a minute. I don't like the way that this market structure is bullish at the moment. So I'm not sure I will take that long. The EA, if you'd have back tested it, would have said there's an edge if you do. But if you don't, it won't work. The EA is going to make losses. You're going to make losses. It's just the EA is never going to set a foot wrong. You're going to set 1,000 feet wrong because that's what we do. We're human. We get it wrong all the time. Part of the learning process, isn't it? But, you know, I know a lot of people that trade manually. Nothing wrong with it. This is why the dashboards are here. But, you know, I now can, right now, I can go away for 3 days, live off grid, and come back and know that this account is being executed perfectly to my strategy and requirements without ever looking at a computer for the next 3-5 days, because it's programmed to do exactly what I want it to do, which is scale into market swings. That's all I do. So if this now pushes all the way up here and then goes up here, it will take another entry, it will move my price for me, and it will get me out when the market pulls back on that leg. I don't have to touch it. I don't have to think about it. That's the beauty. In your opinion, 0.3 stop loss on OLB is okay? That's a bit wide. Not going anywhere today, is it? That's way too wide. You're going to hedge. Depends on the range, isn't it? But I mean, that range there is. It depends. I mean, you can't. You can't say a third of an ADR is a good stop loss because I don't know what the size of the range is that you're trading, where your stop loss is. You know, if you're going, let's look at the NASDAQ trade. So this here, so that is 790, 7940. So 20% of ADR is 8. So you're talking 12. So your stop loss on this short would be there. And your stop loss on the long would be somewhere around about there. So you're placing your stop loss outside the range, which means that if it does this, you're just going to get hedged. If you're happy with that, then do it. But you'll hedge yourself, won't you? Because your stops are outside the range. My testing, we did this morning in the member stream. So we did a load of testing this morning on pre-market range breaks. And all of them showed exactly the same as with the standard ORB strategy. You're much better off using a tight stop. So a stop that's less than 15% of ADR. Because if you're taking a range break of 15 to 20% of the average daily range, it has to move as a 1R. Let's say, for example, you use this, which is roughly 20% of ADR, roughly. So if that's 20% of ADR, that's 40% of ADR. That is 60% of ADR. That is a 3R. That is a 2R. Sorry, that's wrong. That is a 1R. That is a 2R. So it's got to move 60% of its daily range just to give you a 2R. If you put your stop loss another 10% up there, what you're doing is you're effectively saying, I want the market to move 70% of its average daily range. which will give you a load of breathing room. But in a range like we got today, in a rangy, choppy market that's going nowhere, all you're going to do is potentially get hedged into two positions, which are both going to become losses. So I would always say you can test all of this yourself. Whatever your minimum percentage range is, your stop loss should be that or smaller. So if you're trading a 20% daily range minimum, your stop should be less than the 20%. If you're using a stop at 30, let's test it. I'll show you. Let's test. I haven't got my. Test it on. Yeah. Let's go with NASDAQ. Defaults. So if we set the stop to 0.3, we're going to have to set the trailers to a wider, because trailers are going to need to be the same as the stop, ideally, or higher. So if we do that and run that on visual, I've got to update the data. I haven't updated the data in this terminal. Might take a sec. Basically, at the end of the day, there's no right or wrong. Yeah, there's, like I said, if you run a system parameter permutation test on ideal range sizes, ideal stops, ideal targets, ideal partial exits, and ideal trailers, you will get roughly 10 to 15,000 system parameter permutation tests, of which 60 to 80% of them will be profitable. So it doesn't matter which of those 10,000 results you pick, which of those 10,000 settings, those 10,000 targets, those 10,000 stops, doesn't matter what you pick, they will all work. So what you need each day is what you need each day. What you need today, you don't know until the day's played out. You can't see the future. So you have to just pick one. If you want to pick 30, go with 30. But just be aware of the consequences. So run it in the strategy tester. Yeah. So when you run a test, you're going to see that, hang on a minute, it takes a long and a short. How can it be long and short at the same time? Because my stops are outside the range. So if I don't want that to happen, you know you need to reduce your stops. As long as you know that you're going to get hedged occasionally, that's fine. There's nothing wrong with being hedged. I've got a whole EA that works on the premise of being hedged, stock index hedge, and it works absolutely fine. Yeah, this is the SIH EA. It's done 6.5% this month. And this basically gets hedged all the time, doesn't it? It's hedged at the moment on the DAX. No, it's not. No, it's not. It's hedged at the moment on the NASDAQ. So we've got a hedge on the NASDAQ here. It's guaranteed to lose $48 today. It's not guaranteed. It's not going to lose any more than that because it's hedged. That's the whole point. We've already banked on it this morning. We've got one in profit. We've got a second with potential profit. So if that works out and that works out, it will more than pay for the hedge. There's nothing wrong with a hedging strategy. SIH is designed to do that. But if you do it with ORB, because ORB is a stop loss based strategy, you're probably going to find it won't be profitable long term. Let's test it. Right. So in this case, this range here was over 30% of the average daily range. So your 30% stop losses actually happen to be inside the range in this particular case. So it's a very volatile open. We've done 30% of the daily range, bang, in that 5 minutes. So I don't know what the partial set out on this. 70. So it's set at 50% of ADR. There we go. So that's a lovely trade. Look, made $200 odd there. Let's try the next day. Try and find a range that's smaller than 30%. There you go. So that's less than 30% of ADR. That's about 26% of ADR. So what we're doing is we're breaking long and our stop loss is all the way over there. So basically, if this trade doesn't work out and we push back down, we're going to trigger our short trade and it could basically bounce off of the open. And then what you're doing is you haven't triggered your stop loss that way, obviously, on the short. The long trade didn't trigger the stop loss. So you're stuck in the middle on a hedge. Let's see what happens. But there's nothing wrong with that. You're just going to be hedged, aren't you? Right. So this has got a trailing stop kicking in at 30% of ADR. So we've now protected our long. We can't lose. We're in. Guaranteed win. Not going to be very big. And if it pulls back, which it is, okay. So just a small profit. But you didn't trigger the short. Might be a good set file. So there we go. That's too small. So too big. So that's over 40% of the ADR. So it's too big to trade. There you go. So there's another one. So your stop is beyond the opposite side of the range. I mean, there's nothing wrong with this as a strategy. Yeah. I mean, what you're doing is you're giving the market a lot more breathing room. You're giving the market the opportunity to muck about for hours, which it does, and not stop you out. And there's nothing really wrong with that. But your target, to get a positive R is going to have to be a long way. So if that is 30% of ADR and that is 50% of ADR, we're asking the market to move 80% of its average daily range to pay us, which it will do quite a lot of days, but quite a lot of days it won't. So, I mean, it may work, it may not. Test it. There you go. So far, we're 3 for 3, aren't we? Yeah, 3 days, 3 wins. 3 nice wins as well. There you go. So we're up 4%. Right, so there's a good example. So broke long. Your stop loss was outside there. So your stop loss was well outside the range. Your stop loss on this short now is well outside the range. My stop loss would be here somewhere, because that means I've only got to get that far to get a 1-to-1 risk-reward ratio. You need to get that far. You need to get that far to get a 1-to-1 risk-reward ratio. With my 10% stop loss, I need to get, I've already hit TP. Yeah, so that's the advantage and the disadvantage. You get more breathing room, but you've got to move further to get paid. So it's, there's no right or wrong. The days where it works, it works. The days where it doesn't work, it doesn't work. There is no right and wrong. Perfect example. That day, it doesn't matter what you did. You could use any percentage of range you like. None of it would have worked. If the market goes into a range, it will not work. It's a breakout strategy. However, if you've got tiny stops and tiny targets, you will get a trade working. But that's the price you pay. You're going to get stopped out more on those because you haven't got the breathing room. There isn't a perfect setting. The perfect setting is hindsight. Right, what should I have done at the open there? Right, the long trade, what I should have done is anything I like, because it didn't work. There was absolutely no way to make money on a long break today. The short break, what I should have been using was a 10% stop, because I could have got a 1R, which would have paid for the first trade at 10% this morning. And I would have come out with a break even. What I came out with was a $200 loss, because I didn't know what TP to set. I didn't know what stop loss to set. If we ever knew that, we'd be doing like the sports almanac in Back to the Future, wouldn't we? That's what we want. We want to go back 10 months knowing full well the outcome of every single day, and we would get every trade right. Can't do it. So you pick a setting that you know has an edge long term in the past, and you trade that. There's hundreds of them. There you go. Another great example. You can't do anything with it. Range bound. Doesn't work. But look how far away the stop is. Outside of the range. If this thing does this all day long, I'm trying to get it hedged because I just want to show a hedge. There you go, another profit. Not a very big one, but it was a profit. Again, trailing stop's just going to kick in. Close end of day, and it didn't go anywhere again today. You know, these days are rubbish. They're just sideways days, aren't they? Not perfect for the strategy. Just missed the TP there by fraction, but that would have been a nice day. See, I'd have stepped in manually there and taken that. That's a great example of manual intervention. That trade back there we just had, yeah? Where the partial profit line was and it missed it, yeah, if we close there that far away from a TP, I'm stepping in and I'm pressing the button, which I did this morning. Yeah, I'm not going to let it go back to whatever that profit was. I'm taking it. It's as close as you're going to get. So that's exactly what I did this morning. I moved the line up and make sure it gets me out with a profit. You know, things like that you're going to do yourself. Just move that back down because it's actually part of this trade. It just happens to have in almost exactly the same spot, doesn't it? There you go. So this one, you've got the stop losses inside the range because the range is over 30%. So your stop loss being 30%, this range must be about 33, 35% maybe. But, you know, that's taken like an hour and a bit before it stops you out. We made money on the long, not a problem. So we come out of the day pretty much break even. You know, there is no right or wrong with anything. It's literally a case of if it works in the past, it will probably work in the future because the market movement on indices is very, very much the same. There you go, partial, and we've got a guaranteed trailing winner. Stopped out on the short, flip long. But again, look at, you know, watching the P&L flicking about. If it's doing this all day long and I get back to profit, bang, hitting the button. Ended up with $12 loss. But it didn't lose, did it really? I mean, it's not a loss, is it? It's a break even. This is I've never tested this, but it's not looking great, is it? But you might find that you need instead to be using a wider range, or maybe, I mean, this is definitely going to hedge. Taking a 10% range is going to get you into a lot more trades with a lot of breathing room, and it's going to hedge you a lot. But that might be a better strategy. So you're going to get into more entries. You're going to take a lot more 5-minute ORBs instead of 10s and 15s. Again, nice. They're not dissimilar, the trades it's taking, are they, to the higher setting? Again, all needs back testing. Look at that, miles away. Look, definitely you got hedged there. You were locked into a hedge on that for a bit there, not for long, about 25, 30 minutes. Stopped out on both. This is exactly the day that we're having at the moment, isn't it? So hopefully that's going to happen. Can't do anything with this today. It's a mess. Wicks everywhere. Look. Absolutely no directional bias. We're stuck between a rock and a hard place. How did your EA trade the FTSE today? Yeah. Long, which got to about $300 in profit, and then obviously it collapsed back down, triggered the short, so I exited the short. But if I'd have left it unattended 100%, it would have stopped out on the short as well. My EA will trade the same as your EA. My EA is not different to your EA. It's the same one. If you're using ORB, obviously. If you're using my EA, it will do exactly the same on my account as it will on your account to a certain extent. It will do what you tell it to do. So mine is told to look for 15% of ADR as a range on the 5, 10, 15, and it's told to trail a stop at 20% of the average daily range. And that's it. Very, very simple. No trigger on the Dow yet. This is an absolute mess. Look at the state of it. Wicks everywhere. We haven't had Mr. Wick for a while, have we? Oh, where's he gone? We haven't had Mr. Wick for a while, have we? My prediction is the market will go up and then it will go down. He knows what he's talking about. Barrier man. Got to be careful. What else is on my desktop? Just checking for images on my desktop. I think we're safe. Yeah, that's a video script. 3 o'clock somewhere. Oh, good old Mr. Wick. I missed Mr. Wick. He's certainly here today, isn't he? So we're not really doing much. So I'm going to obviously hold the positions I've got on. I think I've got risk on S&P and risk on the NAS. They're doing virtually the same thing. So if I can get the NAS back down to test propulsion, we'll probably be back at break even on the S&P. So if we can get back down into a retest of the session low, I think I'll probably close out the S&P just to remove the risk completely from that one and see if I can get a break on the NAS. The Dow obviously is just stuck in this range. It hasn't triggered any trades. So if we are going to push down on the NAS, I suspect the Dow will probably come down with it. There is no risk on it, so I'll probably just shut those down as well. So that's the plan. If this breaks, I'll close out that for break even. I'll take those off because we're not going anywhere, and I'll just see if we can get a short break on the NAS. Because I've got a bit of profit from the morning. So if we can get down to there, that should put me back up to somewhere in the region of $500, which I think is all we're going to get today. Just not going anywhere, is it? I can't do anything with it. Can't do anything with it but hemorrhage cash if you're trying to trade that on low time frames. Crude oil inventories have just come out. Fear and greed index is still up in the green. So yeah, we should be looking for bull days at the moment. Market's just not interested, is it? Yeah. So greed indicates bullish market. If you look at what we're doing in the indices at the moment, and this, bear in mind, this has only gone bull in the last week. We were down in fear. We've only moved up to greed in the last week. Yeah, not really bullish, is it, at the minute? If you look at the current price action, yeah, we're up slightly, but you know, we've had a gap up. But you know, look at these days. We've had one decent day. Yesterday was useless. Today is an inside bar on yesterday at the moment. Absolutely pathetic. Slightly bullish, but I think the market's being held back at the moment because it's not sure if we're going to continue the bear market. Yeah, we just put a new low in very, very quickly. And there's a lot of people calling for a pullback short on this. A lot of short selling going on. So I think that's holding the market back. If we can break all-time highs, I think we'll be off. But we are really struggling to get back there. Trump's obviously helped it now with the tariff removal. But long term, I'm not convinced. We will see. Right. Dead. And we go. Looks like we're attempting a shortlet. Got a new higher high gone in. We got a lower low gone in. So we're an expanding wedge at the moment, but we're definitely not interested in buying up there at the minute. We're not interested in selling there. It is starting to roll over again, though. So that's the biggest bear move we've had so far the session. Apart from the open, obviously, that's the biggest bear move we've had for the session. So if they can continue that, we can break those wicks. I think we might come down. I'm not going to sit here all afternoon and babysit it. Have you ever tested leaving a small price piece running? Yeah, that's what it does. ORB, that's exactly what it does. Takes 75% off at target. So there's the partial close. That will close 75% of the trade. Partial take profit. So 30% of ADR, it removes 75%, leaves a runner going. But only to end of session. I don't hold overnight. Yeah, don't hold overnight. So everything is, this is a risk reward based strategy. Yeah. So and it doesn't, there's no overnight holds because this is all based on futures price movement. So you don't people don't people as in retail traders don't overnight hold. You can, but if you're going to swing trade the indices, obviously you wouldn't be using intraday price action to do that. You'd be using like 4-hour and daily price action if you're going to hold long term. So don't hold. You can do if you want to. It's nothing to stop. Don't forget, like I said, EAs are automation. If I now go up here, go to common, untick live trading, yeah, and if I cancel off, if I remove that line and cancel off that TP and it breaks short, it will hold it forever. Now, all EAs do is take trades based on rules. So if you decide I'm going to leave a runner going, do it. If it flushes, and this is a pullback short that we're in, which it could be, if you can time the entry correctly and get on that with third or a half of your position, you're going to have a good month. But I'm not an investor, so I don't trade that way. But this all trading is about market structure and reading price action. So right now you are either in one camp, like we were talking about earlier. You're either a bull or a bear. You're flipping long, you're flipping short, you're going for red, you're going for black, you're going for heads, you're going for tails. There's only two things that can happen. It's going to go up or it's going to go down. So your decision is it going to go up or is it going to go down? If you're a technical analyst at the moment, reading price action and market structure, what you are seeing is a low going in after that high and a pullback. Yeah. If you're a Fibonacci trader, you're seeing a 71.9 retracement. If you're an Elliott wave trader, you're seeing an ABC pattern formation. Yeah. So if you're bearish, this is where you're going to sell it. If you're a bull and you think that this move here is part of a correction on a leg down, you're going to be selling it with a view to buying it to break out those highs. If you believe that all of this Trump nonsense with tariffs is going to be completely undone, you're probably trading a V-shaped recovery move at the moment, which means you're going to exit your position there because you will expect it to bounce around up there. Whichever one of those strategies you believe in, you have a 50-50 chance. Either going to do it or it's not. Whether you make money or not is dependent on where you place your orders. If you place a stop loss there, believing that it's going to go short, and it does that, you're right, but you're not going to make any money. If you're a stop loss trader and you place your stop loss there, and it does that, well done. If you're a stop loss trader and it does that, well done. Yeah. What you think is going to happen in the market is going to happen. I can tell you with 100% certainty, if you come back into the stream in 4 weeks' time, I can guarantee you with 100% certainty, we are either traded at that price or we have traded at that price. Yeah. Set a calendar mark, 4 weeks. Lee said we were either going to break the high or we're going to break that recent low. 100% guaranteed. So what's your job now? Press buy or sell. That's it. Whether you make money or not has got nothing to do with which of those it hits. Whether you make money or not has got to do with where you place the order to take a loss. That's what's going to lose you your money. And where you place an order to take your profit. Best traders don't use take profits. They use stop losses if you're using a stop loss strategy. Because if you say, I am going to take a short here and I'm going to risk that much and I'm going to make that much reward, that is the only thing that can happen. If the market now does this and pushes down to here, you can remove that risk by breaking even. And if you don't have a stop loss and you're right, you can make 50R on this. But if you leave a stop loss in place, the maximum you're ever going to make is 2. Yeah. So the best traders have a plan where they get in and they plan where they think it's going to go. But that isn't necessarily where you're always going to take it. Because the market will go where the market will go, and it will go where it's going based on what is happening in fundamentals. Technical analysis is a coincidence with fundamentals, because when you get to that point there, if somebody says something like Trump that makes the market do that, it's got bugger all to do with the fact that it hit there. It's just around about the same area. If we get back down to there, there is no news in the market and Trump doesn't say anything and it does that. The reason is because everybody that was short at this area got broken through and had to flip long. So they add into their position. That is technical analysis being fulfilled by market participants rather than by fundamentals. One of those two things will drive the market to test these areas. It could be a fundamental that drives it there or there. It could be that the market is just going to continue to buy stocks until it hits there. But I can guarantee you it will react there, regardless of whether someone says something or whether or not there's just a load of orders sitting there. There is a load of orders sitting there because everybody on the planet is seeing a double top at an all-time high. There's a lot of pending orders sitting there. It's going to happen. It's just self-fulfilling. But if we get to here and Trump says, I'm going to give every company in the US 10 million as an investment, it's going to blow through everyone. And what will happen is everybody that has their pending shorts there will have a flip order set there to go long. So it will break through because of fundamentals, not because of pressure of buyers and sellers. This is why trading is so difficult, because there's too many factors at play. You are a passenger on a vehicle that is moving. This train is currently going in this direction. You are either going to get off at that station or that station. Get on the train at this station in the direction you think it's going to go in and walk away. Because you can't do anything about it. Everybody's trying to pick the top and the bottom all the time, and you can't pick tops and bottoms because it doesn't have an exact top and bottom price. Therefore, in a long-winded way of what I was saying, there's no setting that's right in an EA, is there? You can't have an EA which has got a best setting, because the best setting is what you should do each day. There isn't one. Pushing up propulsion field on the NASDAQ. So bulls taking control. I think I've broken log on the Dow. No, I haven't. Not yet. Dow's still coming down. Look. So we got divergence. Dow Jones is bearish. S&P and NASDAQ are bullish at the minute for the last 5 minutes. Doesn't mean anything, does it? Things a mess today. I give up. Nothing we can do with it. It's just a choppy mess. So I think I'll call it there. I'm back on Friday morning. We'll have a recap of the week. Be aware of news tomorrow. We've got the Bank of England rates. No, sorry, I haven't. I was going to say, we had those last week. We've got the unemployment rate for the Aussie, and we've got the PPI coming out for the US tomorrow. So GDP at the moment, I'm not really paying an awful lot of attention to. GDP on everybody's month on month is going to be down because the tariffs came in, import-export basically stalled. Therefore, the gross domestic product isn't going up, is it? So this is all factored in. Market's not going to pay much attention to that, I don't think. Unemployment's a bit woolly at the minute. It's coming out as forecast anyway, probably, so I wouldn't expect much off of the Aussie. But PPI, Producer Price Index, this is fairly important at the moment because obviously what has probably happened is we've had that constricted. They were forecasting it to go up, but I would suspect, I don't know, it's difficult to call at the minute, but I would suspect we're going to get a deviation on these numbers tomorrow. So watch those. We're probably going to get a move on them tomorrow, I would suspect. CPI, I was expecting to get a lot more movement on. If the PPI numbers also come out slightly lower than forecast, which is probable, I think we might get a little bit more weakness in that US, but we'll see. So that's your only other main news tomorrow. Friday, I'm back. We got Schlegel speaking, and then it's Michigan. So not a lot really. Right, I'll be back on Friday. Anything you need, let me know. Other than that, I will monitor these, but I don't hold out much hope for today, really. Unless somebody says something or kicks this market into touch, I'm half thinking about just getting out with a break even today because we ain't going anywhere. So I'll be back on Friday. Anything you need, I'll be in Discord or Telegram. Other than that, have a good day. Have a good day tomorrow, and I will see you on Friday. Have a good one.